All right, everybody, thanks a lot for joining me as at this Monday afternoon market recap. Today, the markets have once again popped and continued, also some in which have broken above not only the mid-March swing high, but also that late February swing high as well. This is the Dow Jones Industrial Average, closing up 329 points, a little over 1%. We do have a little bit of a gap and go type of candlestick, which is bringing these markets as a whole right now within 2% of their historical all-time highs. This is taking us all the way back to that September and also October period. So it looks as though the markets are waking up. They are continuing to the upside. And the good news for everyone in that pro analysis class and who've been watching along on these YouTube updates for quite some time is that we have remained very optimistic on these markets prior to, of course, the retracement, the correction back into those late December lows, but also more importantly, as soon as we saw this reversal candlestick over here, this one white soldier, on the 26th of December, we immediately began to shift to the bullish stance. And again, at the moment, we are continuing to be paid off, depending on whether or not you are holding, of course, those diamond positions. If I flick on over to the S&P 500, this translates into the SPYs. We're closing up another, or just over 32 points. We've actually hit our target at 2,865. Again, we've taken out the February, the early March, and also the mid to late March high, as at the close on Monday, which is now taking us very close to, again, within 2% of its historical all-time high. So the market is firmly, very much so bullish. We're bouncing off from not only once, not only twice, not only 3 times, you could even call it 4 times since January, the rising exponential moving averages, the 10, the 20, and the 50, depending on the depth of the correction. Some have only hit the 10. Some have retraced more or less all the way down into the 50, but most recently we've bounced off from that 20 exponential moving average. What you want to pay attention to, and again, just to quickly show you this, on the NASDAQ, we jumped up just under 99 points. We haven't taken out the swing high on the NASDAQ, but I'm sure we will do that over the coming sessions as well as we charge on up to about 8,000, that next psychological round number. On the NASDAQ, if you've got Q positions on the long side, you're sitting back with a big smile on your face right now. So I just wanted to say congratulations. Now, again, I'm expecting these markets at some point, probably in the second quarter of 2019, to take out their all-time highs. And once we do that, I've given you a lot of warning, in fact, but I'm going to warn you once again. This entire sideways move just here has been acting as a pressure cooker. We've largely been in a consolidating type of pattern, moving sideways. Once we begin to pierce the resistance of this, a lot of the short sellers, or at least those who are bearish on the market, are going to more or less be forced to buy to close those positions, which are already going to add fuel to the fire of really the market, which has just taken off again since that very late 2018 period in the month of December. So the markets are very much so strong. They're healthy. They're resilient. They're holding up. If we flick on over, or at least flick on back to the industrial average, and I'll show you this through the eyes of the CCI, the Commodity Channel Index, and also the ATH, what you're starting to pick up on, hopefully, is that the ATX is turning up and the CCI is still firming up above 100. This is very positive, ultimately, for the markets to crack this resistance area. It doesn't necessarily mean we'll do it on the first attempt. In fact, what we'll probably do is we'll actually stop up here, we'll pull on back down, and we will establish that of the next higher swing low, or higher swing high, relative to the lows, of course. So, I mean, that's probably what's going to happen when we get up into this area. But pay attention to the ADX. You want to see that continue to rise. But more importantly, with this current sort of market environment or situation, given that we have moved sideways for quite some time, once this CCI, once price gets up into this area, if we are remaining above the EMAs and also this is above that positive 100 print, it bodes very well for the market ultimately breaking above these swing highs. So you've got limited opportunity. We've been speaking about it, or at least positioning the perspective, you could say, through the lens of, I guess, the following 1 or 2 sentences. This has been a fantastic time to accumulate positions prior to the breakout occurring, because when the breakout occurs, it's probably at some point going to turn into a relatively wild ride to the upside. You're probably going to see at some point parabolic rises, things that don't necessarily make sense. I'm not sure if that's going to be in the second quarter. I think the breakout will be, but this might sort of move into a transition into the third and also the fourth quarter. But at some point, all right, depending on the fundamentals and also depending on the technicals, once we see these trending indicators once again stretched, like we saw them stretched back in the fourth quarter of 2018, we will become defensive on the market. But that is not for a good couple of months into the future. Now, very quickly, just to recap some of our stocks in the top 12 individual trade list, I would encourage you to jump into that pro analysis class if you haven't already done so. Apple is continuing above the 188 trigger. It's also continuing above, obviously, 178. That was the second most recent entry in 175.99. So it is taking a little bit of time, but it is still technically trending, and we are still holding up above the exponential moving averages. Firming up again today off from that rising 10 exponential moving average. Amazon today had a little bit of a pop, 33 points. Had a couple of entries on this, one prematurely at 1681, most recently 1787. We've got that third entry at 1835. And the good news about this trade, one of my favorite things about this is this inverse head and shoulders and this definitive resistance area just here, and also the 1, 2, and now potentially that 3 breakout pivot. So if we take out the swing high in March over here, this should really rocket to the upside over the coming weeks and months, all the way back up to $2,000 per share on Amazon. So that is a fantastic trade. Now, we've been speaking about Boeing Airlines popping above 382.90. Well, it happened today, up $10.12. We're closing at 391.54. A very nice candlestick. It doesn't have as solid, I would say, of a foundation as what Amazon does, but again, we're picking the right directions. We've got the trade up to 415.90. Just allow a little bit of leeway on the stops on these trades, given, of course, potentially a little bit of market volatility continuing. So another great trade there on Boeing Airlines. We've been speaking about Baidu potentially waking up and closing up $4, $5, $6 at some particular day. Well, surprise, surprise, here we are on Monday. Closed up $5.55. We've got a nice volume expansion. We've got a little bit of a gap off from the support area. And on top of that, when you start looking at this trade setup, or at least the firming up of the trade, and you're thinking in terms of, I guess, positive or bullish divergence and the basing pattern that we've been putting in for the past 3 months, more or less, this has got all of the potential at a minimum, an absolute minimum, to come back up to 190.87. So we're looking at this now. 174's essentially the trade entry. We haven't triggered it yet, but it does look as though we are starting to see some green shoots come through, and there might be a little bit of life coming back into Baidu, which is going to be exciting because a lot of people have been turned off during this 3-month transition. Not to mention, of course, the relatively weak sort of bearish short-term trend we were in during the fourth quarter, but also extending back into the third and also the midpoint of really the second of 2018. So again, it's been in hibernation, and it's coming out, and it's looking good. We've got Caterpillar today up $4.76. This was after the 135 entry that we had last week, and also the week prior. We had a secondary entry, all right, at 136.66. We've blown through that today. Look at the volume. The volume is coming back into this stock. This is, if you wanted to draw parallels, you could draw Caterpillar very close to that of Baidu. So I'm going to do my best and actually write Baidu. My mouse is a little touchy. It's not my writing, I promise. But this is very similar to the setup in ways to Baidu. But also, I mean, just to recap again, $4.76, a massive move to the upside in Caterpillar. Great volume. But also the secondary parallel is very similar to that of COP. The only difference, however, is that COP hasn't actually broken to the upside yet. I think it's coming. I very firmly think it's coming. And at some point, like I described about Caterpillar and Baidu, you're going to see a session day bar whereby it's up 3, 4, maybe 5%. And there may not be any fundamental news that people are tying to the actual price move. But really what's happening right now is we're in a little bit of a pressure cooker of its own. And again, when a lot of people begin looking at and calling these sort of inverse head and shoulders patterns, it's just going to add fuel to the fire, even though technically speaking, it's not really all that correct. All right, you're really stretching the analysis to really validate some of these reversal chart patterns, namely because we haven't actually been in a bear market. I mean, technically we were down on some of the indices, I think over 20%, but it was only marginally and only for a session or two. So again, we're just looking at continuation patterns to the upside. CVX looks to be breaking out of potentially a bull flag. We've got a very neutral trade set up on this. It's not necessarily meant to be a go-to trade for the week upcoming, but we might see this pop depending on what oil does later in the week. We've got Disney taking off to the upside again, 111.68. We're closing at 112.51. So we've got this little tag into our green rectangular box of support. We're starting to turn and bounce. So again, the next target on this is essentially 116, but I think it's going to come all the way up to 118.94 before it actually stops, if this is the legitimate roll. What I haven't done is actually shown you some of these oscillators. Have a look at these oscillators. They're all starting to flick on up and begin to register buy signals mixed with not necessarily the exponentials moving sideways, but the simples acting as support. You'll see this phenomenon a lot across a bunch of individual stocks as well. So I just wanted to report on that for you on Disney. You've got Google again taking off, very similar to Amazon. You've got that sort of 1, 2, 3 backtest at the moment of this critical pivot over here at 1156. That was our first entry into Google over here, 1156. This coincided with a very short Bollinger Band squeeze, very similar to Amazon, where I said just before it was a little premature, but it ended up taking off to the upside in the direction of the prevailing trend. Understand that when it comes to Bollinger Bands, generally they will break in the direction of the prevailing trend, okay? So just always remember that, write that down. And the golden rule, of course, is that a trend is assumed to be in effect until it gives us definitive signals that it has reversed. Very important when it comes to the market indices and understanding the continuation of macro trends, even in the face of extreme bearish sentiment. It's going to, one, save your butt a lot in placing incorrect directional trades, but also it's going to allow you to capture the actual trend continuation as most people are selling. You'll actually jump in and begin buying, all right? Really strategically off from macro pivots, which is what we've identified, during the months of December. And as such, right now, you should be sitting back again to those pro people with a big, big smile on your face, excited about really the next couple of months, or next, couple of quarters as well. So Google again up $22 today, nice little trade there. IBM, this is something that I've been rather hesitant to actually take the trade on. So personally, I'm not in IBM, but you can see here 142, we closed up $2.20. A nice long day Morobozu shaved top, or at least a shaved bottom, a little bit of a slight wick on this candlestick, but really just a really nice sort of continuation on this trade. If you're in it, just place your stop either below Friday's low or below that of Thursday's low at this particular time. Allow a little bit of wiggle room. And today again, Netflix comes back to the party, up $10.40 above the 362 entry, and it's getting very close to that secondary entry at 372. It looks as though we've got a little bit of another false sort of move to the downside. We held up above that lower Bollinger Band, and as such, we've just retested this support that we've been building really since the resistance that was established in January. So we've got the February tag, then we've got the March tag, and now what we really do is have a real slight higher low as well. So, I mean, it's early days on Netflix. It's early days on a couple of these stocks, but what isn't early days is the trend continuation of the equity markets higher. I mean, it's just continuing. So, again, I would encourage you, don't let your ego get in the way of the direction of the market. I understand how people can be very much so bearish on this market and calling for a big macro reversal up and around these areas. I just encourage you respectfully to be to think twice and to reevaluate the technicals of the market, and above all else, keep yourself out of harm's way. I think right now, it's not that I think, it's that I know it's too premature, even if you are deemed to be correct in the future, that a big market, or at least an impending market reversal, is on the imminent horizon. At this particular point, if you wanted to technically trade such a type of directional trade, it would actually come down here below 2725. So if you're up here and you're buying market positions on the downside, or sort of really chancing your luck at the market getting strong rejection from these resistance areas, for instance, I'd say, whoa, just take a breather, relax a little bit, and allow the market to confirm to you that it wants to move lower, instead of you trying to force the market, all right, to actually correct itself. I mean, it's not going to work out in your favor. Take my word for it. All right, so that's going to do us as at Monday afternoon. I hope you've had a good day of trade, everybody, and very excited for the couple of months and quarters ahead. All the best. James signing off on behalf of Pivot Point Trading. Goodbye.